Have you ever wondered what truly drives the price and potential of a financial contract designed to give you a choice, not an obligation? The underlying asset is the fundamental pillar of an options contract, as its price movements directly dictate the option's value and profitability. Simply put, an option is a derivative, meaning it derives its value from something else. That something else is the underlying asset. The importance of the underlying asset stems from the very nature of an option. When you buy a call option, you are gaining the right to purchase the underlying asset at a specific price. When you buy a put option, you gain the right to sell it. Therefore, the value of that right is intrinsically tied to what the underlying asset is currently worth, its expected future price, and how much its price tends to move. For instance, if a call option allows you to buy a stock at $100 and that stock is currently trading at $110, your right is already valuable. This relationship forms what is known as intrinsic value. Furthermore, factors like the underlying asset's volatility or how much its price fluctuates also play a huge role. Higher volatility in the underlying asset generally means a greater chance it will move significantly in one direction or another, which can increase the value of an option. To effectively use options, you must first understand the characteristics and market behavior of the underlying asset. Begin by identifying the asset type, whether it is a stock, an exchange-traded fund, or a commodity. Next, analyze its historical price movements and volatility to anticipate potential future swings. Always stay informed about any news, earnings reports, or economic indicators that could impact the underlying asset's value. This foundational research allows you to select options strategies that align with your outlook on the underlying's future performance, whether you anticipate a large move, a small move, or even a sideways trend. This deep connection to the underlying asset is what gives options their unique leverage. A small percentage move in the underlying asset can translate into a much larger percentage change in the option's price due to this inherent sensitivity. Understanding the nuances of the underlying asset, such as whether it pays dividends, also becomes critical. For example, dividends can cause a stock price to drop slightly on its ex-dividend date, which can impact the value of both call and put options. Recognizing these details helps you navigate the subtle complexities of options pricing, moving beyond just simple price action to a more holistic view of the market. Ultimately, recognizing the underlying asset's critical role means you are not just trading options. You are trading a nuanced view of that asset's future. This comprehensive understanding empowers you to manage risk more effectively and to position yourself for potential profit by appreciating the direct link between the asset and the derivative. It transforms options trading from a speculative gamble into a more informed and strategic endeavor.